All right, let's check your money today, and we need to do that from time to time, of course. Check in with my good friend Nick Hopwood. He's with me. He is from Peak Financial, Peak Wealth Management, and he's with me here today. Nick, nice to see you today, as always. Great to have you on board. Watching all these things go on. Apparently, they're never going to change the interest rates. I mean, that's just the first thing I'm about. The interest rates are never changing. In fact, they're going to go up at some point, which is weird, because to me, it just seems that we should be doing something. Although you say the market's predicting an 80% chance. I'm taking the under on this, Nick. I don't think they want to change the interest rates. You say it's an 80% chance that they're going to cut interest rates. I think they should. I think it would help out people trying to buy houses and used cars. Nice to see you this morning. Why your prediction?
Thanks for having me. I would guess, based on the market's 88% chance that the Fed will cut in September. We do have some important data coming out today. The inflation number will be this morning at 8:30. That will be very important because last month ran a little hot at 2.7%, and today's prediction from the economists is 2.8%. So it's going in the wrong direction, and that could stop the Fed from cutting, like you said.
Yeah, that's what I just feel like. I just don't think that Jerome Powell wants to help out Donald Trump, and therefore, by extension, doesn't want to help. I mean, right now, wouldn't it help people if they could get a 1/4 or 0.5% rate cut on buying a used car, lowering their rates on their credit card debt, whatever it might be? Wouldn't that just help ordinary folks?
It would, and that's the idea, is to jumpstart the economy with cuts. But from a savings and investment perspective, remember, your money market rates would fall by the equivalent amount of the Fed rate cut. But for our longer term investors, it's important to understand, we would expect rates across the board to drop eventually, and that will help our bond investors, our fixed income investors. It should be a good environment for savers and investors who are conservative.
All right, well, I guess I'm a mixed bag when it comes to that. All right, let's see here. We were just talking about this. You were listening to the fellow before, Tory Bruno, talking about the damage that could be done if China goes after Taiwan in an aggressive fashion. The damage that could be done. You pointed out to me that all NVIDIA chips and AMD chips are built in Taiwan. I mean, it's a pretty critical supply chain, isn't it?
There's no doubt. Actually, the company Taiwan Semiconductor is the manufacturer for NVIDIA and AMD. Intel is the only company that manufactures their own chips here in the U.S. So Taiwan Semiconductor is creating factories that are not yet operational in the U.S. So they're going in the right direction. But if something were imminent, it would be a disaster, because a lot of people argue that NVIDIA is the most important company in the world right now with the AI spend.
So if they're the most important company in the world, and they're under the shadow of China, then why do we let that go on? Why don't we move NVIDIA out, bring them here, do something? I mean, wouldn't that be the smart move?
Yeah, it's wild. I mean, look, you look at the stock price of NVIDIA, which is going to the moon, and then you look at a company like Intel, which has been dead in the water for 2 decades. You would expect some people to be thinking about this Taiwan aspect, but I guess the market ultimately feels like it's a low probability that anything is going to happen.
Yeah. And would China destroy NVIDIA on their way in? They'd probably try to avoid that, I would suppose. It's critical, though. It's bizarre how we rely on such, I don't know.
Now, Steve, speaking of NVIDIA, right?
Yeah.
Let's talk about the Trump administration's deal with NVIDIA and AMD,
All
with
right.
15% of the sales coming back to the U.S. Now, this is really interesting because we've gone from broad country tariffs, right, from one country at a time. Now, Trump is making deals with one company at a time. So Trump says no sales to China. And now the sales are open, but now the U.S. takes a cut. It's very interesting. There probably will be some legal issues. I'm not a lawyer, but this is what I'm hearing. In addition, we have companies like Apple investing in the U.S. after Tim Cook has a meeting with Trump.
$600 billion.
Yeah. It's like every time the CEO comes to Washington, there is some sort of negotiation, and Trump says, we're going to eliminate your tariffs as long as you bring money back home. So it's really shifted from country to company specifics.
And what do you think what does that portend long term then?
Well, your crystal ball is as good as mine as far as that goes, but I think that it's going to lead to a lot higher U.S. tax or tariff tax revenue, right? So that's good for the deficits, hopefully. That's
Right.
my first, that's my gut feel.
All right. So stock buybacks. I want to get to this. We got a minute and a half left here. Stock buybacks are on track to reach an all-time high this year. You've got a graph for those folks watching on YouTube and elsewhere. What do you got for me?
Yeah, you can see that 2025 is going to be the largest year ever for stock buybacks. But let's contrast this with the dividend yield, right? The dividend yield on the S&P 500 is about as low as I can ever remember at 1.1%. So we have highest buybacks and lowest dividends. So let's look at Apple. Apple has a $100 billion buyback program this year, which equates to a 3% amount of their market cap, whereas their dividend yield is only 0.45%. And so a lot of analysts like to add those numbers together and say Apple has a yield of 3.45%. But if you are an investor looking forward to dividend income, you're just relying on the price going up. You're not really getting much cash flow. So I think that's pretty interesting.
Pretty interesting. All right, we got 20 seconds here. The Bureau of Labor Statistics seems to be a disaster. Trump pointed it out. The left goes crazy, but their numbers are so off, and off by 1 million jobs when Biden was in office, they said. Can we fix this? I mean, when you make decisions, you have to have good numbers. You got 10 seconds for the answer.
Yeah, Trump fired the head of the Bureau of Labor Statistics, so that's one step in the right direction. But the methods are so antiquated, phone calls, and literally people going around to stores in each city. It's ridiculous.
No, well, there you have it. You want to get a second opinion, please do peakwm.com. You can talk to Nick anytime. peakwm.com/Gruber. Get a free Roth conversion analysis and talk to my good friend Nick Hopwood. Nick, thank you.
Thank you.
There you have a quick break. I'll be right back.